Welcome to another module of our free wholesaling course brought to you by DisruptorsU.com. Today, we're going to be talking about paying yourself.
Disruptors. Yeah, see, we real estate disruptors.
A lot of you by now may have started your own LLC and are paying yourself through your own LLC, which is a great first step. But what you may not have done is electing for S Corp recognition, dealing with the IRS. And what I mean by that is if you register as an LLC, as far as the federal government goes, you are a partnership, which in of itself is not a terrible thing. A problem you're going to run into is you're going to be paying excess FICA. This is the money that's set aside for Medicare and so on. So what you want to do as you start doing deals, this is not after you've done one deal, two deals, and so on. This is after you start doing deals consistently, is you want to start paying yourself a wage. You want to have payroll run out of your company. The first thing you want to do there is having your LLC elected as an S Corp. And so the common mistake I see all the time is when someone does not elect to be an S Corp, they're literally paying FICA, which is 15.3%, on the entire profits of their organization. So if you're making $30,000, you're paying FICA on $30,000, 15.3%, which is not awful. But if you're making $60,000, you're paying 15.3% on all of that. Again, not awful. But if you make $200,000 and you're paying 15.3% on all of $200,000, now we're kind of having a problem, right? I mean, anything in excess of $100,000 that you're paying FICA on, think about that 15% on $100,000, that's $15,000. That's money that could be used wisely to invest into yourself, invest back into the business, whatever. So one of the first things you want to do is you want to elect to be taxed as an S Corp. And then right after that, you want to start paying yourself a wage. Now, some people are uncomfortable paying themselves a regular salary, but I would argue, and this might sound, high and mighty here, but I would argue you don't have a real business until you can pay yourself a regular living wage. So maybe you start off at $2,000 a month, $3,000 a month, $4,000 a month, but you should be paying yourself a monthly salary. And whatever you're paying yourself on that monthly salary, because you're self-employed, you are paying that whole 15.3% FICA on it. However, any additional profit over your salary, you do not have to pay FICA on. And that's where we're talking about tax savings, being a little bit smarter with your money. Now, don't forget, I am not an accountant. I'm not a CPA. I'm not an IRS individual entity, nothing like that. I'm just telling you what I do with my business, something for you to consider if you don't want to pay excess taxes on your income. One thing I wish I learned earlier in my career was to pay myself first. Now, I knew growing up that you always paid yourself first, right? You take whatever money you made for your W-2 wage and you set aside 10% into savings, never to be looked at again. And if you did that, you would naturally save money. For whatever reason, once I became self-employed, I completely threw that idea out the window, thinking like it doesn't make sense in business. And I kind of got into this grind. You got to grind. You got to pay yourself as little as possible. You got to invest everything back into the business, which is, is a popular concept. You hear people say all the time. And I was that person. And I want you to sit back and just think about, if you were that person and you went through COVID, real estate aside, there were a lot of businesses that got hurt. How many families said one day I will pay myself? I'm going to grind. I'm going to invest in the business. I'm going to grind. I'm going to invest in the business. And one day I will pay myself. And when COVID struck, how many of those business owners lost everything? So not only did they lose their whole business, but they lost all those years of sacrifice of one day I'll pay myself back. And so I know, again, the conventional wisdom in our industry, in real estate, is to grind and pay yourself as little as possible. And I'm here to tell you, I wish I paid myself first earlier, because then I would have more money. Because what happens, and they don't talk about this enough, is there's a principle called Parkinson's Law. And Parkinson's Law basically states, however money you have set aside is how much money you're going to spend. And so if you don't set money aside, you will literally spend all that money. I'll give you a couple of examples. Think about the last time you traveled somewhere. When you left your home, was your suitcase completely full or partially full? Odds are it was jam packed. You filled it to the brim. Think about your room. Is it used 100% or 30%? Think about the last time you ate a dinner. Did you eat the entire plate or did you eat like 30% of the plate? So what we do naturally as humans is we will consume the entirety of the space or the budget or whatever. Kind of like a contractor will never come in under budget. They will use the entire budget, right, on a flip. And so profit first says instead of paying yourself last, you should pay yourself first. So here's what I recommend. You want to take 10% of whatever you make and set aside for profit. This is money that you're going to live off of, right? This is money that's going to go towards your wages as well, but 10% right at the top to pay yourself. And then after that, 10% set aside for charity, tithing, whatever you want to do, whatever your personal purpose, mission is, and so on. Take another 10% set to reinvest in yourself and your own education. I've met a lot of successful people in this industry, in real estate, and there's one thing that's consistent is they've all invested in their own personal development. No one achieved massive success by also refusing to invest in their own education. So taking 10% and invest it back into your education. And after that, whatever's left over, that's the money that goes into the business. That's the money that you get to pay your taxes out of. But whatever the case is, the important money is set aside, and now you get to work off the difference. And again, Parkinson's law says that if you only got 70% of your income to work with, well, then that's what you're going to work with. That's what you're going to put into your business. But if you don't pay yourself first, you will magically spend 100% of your money back into your business, and you're going to run into a situation looking later on wondering, I know I made a lot of money. Where did it all go? If you're finding yourself asking yourself that question, because you're not paying yourself first. And one last bit of advice is, this is something that I wish someone would have told me when I was getting started, was you don't need to be your own bookkeeper. You know, I always was like, I'll just take care of it this weekend. I'll get caught up on my books this weekend. Maybe I'll set aside some time to get caught up on my books. Fact of the matter is, if you're in this business, you're not the kind of person that likes to work on your QuickBooks or your accounting and so on. And for that reason, you never will, and you'll never come to love it. So as soon as you can, hire a bookkeeper, either within your administrative team, you know, a VA, assistant, whatever, or eventually having a profit first certified accountant. That's what I use, and that's what's helped me gain massive clarity in my business. If you haven't yet, please enroll in the 100 Millionaires Mission. We want to know who is part of our community, who is actively doing deals, who's committed to becoming a millionaire. We want to know who you are. So if you haven't yet, please be sure to register for the 100 Millionaires Mission.